Hi, everybody. Welcome back to Mondays with Mike. I hope everybody's January has been off to a really good start. It's almost the end of January already. I can't believe it. I want to come back to this topic that I've been talking about, coming back to, which is real estate investing. And I think the comparisons I've been making recently between real estate and investing in something more liquid, like the stock market, or in some cases, if you have a 401k or an IRA, your advisor may have you in a mix of bonds and stocks, depending on where you are uh, with regard to retirement and your savings plans, your earnings plans. Um, you've probably all heard that before, but you probably haven't ever really thought, how does this compare to real estate? And the easiest way to break it down is to think about the two ways that investments make money, right? So on the one hand, you have appreciation. Everybody understands what that means, right? You buy something, hopefully it's low when you buy it. You hold it for some period of time and it appreciates in value. The value of it goes up. So when you sell it, hopefully for a lot more than your transaction costs to buy and sell it, you have a profit, right? So in stocks, what does that look like? It looks like buying low, selling high, same thing with bonds, and you're relying on the market value to go up. So the same can be said for real estate, of course. We've talked about that many, many times recently about how much appreciation we've seen in the market. But what's interesting about real estate versus stocks, in real estate, if you buy something, you can increase the value with your, I'm going to say with your hands, but really with your labor. You can improve property, and you can not just rely on the market value going up, but you can actually improve the value of it by putting some money into it, investing money and time and work into the property. For to get the equivalent type of result in the stock or bond market, really more particularly the stock market, what would you have to do? You'd have to research a company that you thought was going to invest in its business systems and improve its business, improve the value, and know that before you bought it, so it wasn't built into the price already. That's pretty difficult to do, right? You're not allowed to have inside information when you're buying and selling stocks. So pretty tough to pull off in stocks. You kind of have to have a crystal ball or get lucky or be a really good stock analyst. Um, Real estate, pretty simple and straightforward, right? So that's the appreciation component. What's the other component? Income, right? And people may not even realize that there is an income component to stocks, but they're called dividends. Uh, Many stocks pay a dividend. Bonds, that's the whole nature of a bond, is it pays, there's a coupon payment, or there's some interest payment that's getting paid to you for, essentially lending money to the company. You're buying the bond and you're lending money for interest. So it's built into bonds. With stocks, it's not a given. A company may change the dividends. And again, you have to have a crystal ball. You have to be a really good analyst or have, industry insight to know what that income stream is going to look like with any precision. And I think you already know what I'm going to say. With real estate, very straightforward and very much in your own hands. If you buy a property, assuming that you have permits for it if needed, and you're doing everything the right way, you can rent that property out. And if you improve the property, you'll get a higher rent. Maybe just as is, you'll get some rent in the door. But even with a single family home, you have the option to add income, and it's very much in your control. Uh, so I'm not going to go too far into it. I promised myself that this was going to be a shorter one. I just wanted to address that point. We'll be doing some like comparisons with some other features of real estate versus we'll just keep using stocks and bonds. I think that's probably what most people are invested in, for passive investments that are with the financial advisor. I just wanted to highlight for you guys, the main ways to think in terms of appreciation and income production. I'll leave it there. Happy to talk this through and really nerd out on this subject with anybody who's interested. Direct message me, give me a call. Would love to hear from you. Talk to you next week.